Okay, so we have people joining in. Welcome to episode 10 of DX Leaders, a series on digital transformation. We have a fantastic topic today and even more fantastic guests and experts for a fabulous discussion today. We are talking about innovation in digital banking and customer engagement, and we are so glad that we have people from the consulting side, from all kinds of life and business. We have the specialists, the generalists, we have all kinds of points of view, but we couldn't do that, of course, with the support of Swissjam and Deloitte, who is bringing this series to the world. And of course, we couldn't do it without my co-host, Andreas. Andreas, how are you doing today?
Excellent. Thank you so much, Lars. It's becoming a routine, to co-host that together with you. So very happy to be here.
Fantastic. So today's episode is presented by CREALOGIX, Synpulse, NCA, and Bank of Singapore. And before we go into the details, let me introduce myself as well. My name is Lars Födersch. I am a former journalist, professional storyteller, and very happy to do episode 10 together with Andreas for the DX Leaders. So innovation in digital banking and customer engagement, what does it mean? A little bit of context. In Asia Pacific alone, about 44% of the top 250 banks are focused on their connected core transformation and working on platform-based modernization. And we'll hopefully have a little bit of insights what that actually means. And with the right technology investments, banks can capture their share of a massive $3.1 trillion in digital value, and that's at stake for the industry. So at the same time, we know that 70% of digital transformation projects fail. Should we be worried? We'll figure out today. But before we go into the topic, Andreas, where do we stand with the award series?
Thank you, Lars. We are actually well on the way, so I'm not going to spend too much time, but if Clarissa could go on further, I just want to obviously tell the audience what this is all about. One further, Clarissa, please. So this DX Leaders series that we are having today is really part of this Digital Transformation Award. And as you can see here, we have been very successful in bringing in almost 43 applications. We have also a subcategory on FinTech where we had strong traction and got in a lot of interesting applications. So very happy to be at this stage. We also brought in, a jury. So for the different 5 subcategories, we brought in a very diverse set of different people with different backgrounds. So we're very happy about that. Obviously, we couldn't have done that without our sponsors. So at that stage, really also a big warm thank you, especially also CREALOGIX, that was very early in signing up for sponsorships. So thank you very much, Karsten. And obviously we have a lot of other sponsors. So we have EDB, we have DKSH, Tilke, and I think they all show with their sponsorship that digitalization is really a key topic. So very happy to have them. And this is all also anchored in the ecosystem in Singapore. So we have strong support from all the chambers. And obviously, this is not only a Swiss initiative, but really broadly supported by the ecosystem. DX Leaders is really this best practice exchange platform that we are having today. And we will continue with that series into next year. So also very happy about how we were able to bring this up. And I think we can say without kind of overstating that this is now an established brand on digital transformation. So we're very happy about that. So one further. So where do we stand with the Digital Transformation Award? So we are currently having these closed doors pitching sessions where we are reducing the 43 application to 3 by subcategory, and we will go to the public pitching on the 25th and 26th. So all the people that are online now, please join, put a big mark into your agenda, 25th and 26th, I think, as of 5 o'clock you can join in, you can vote, and you can really make this a great success. So we're counting on you and very happy to welcome you during the public pitching nights. You will see a lot of interesting fintech applications, and so I think it's really worthwhile to tune in. With this, back to you, Lars.
Thank you, Andreas. And yeah, so we've had a look at behind the closed doors and some fantastic applications there. The jury is really hardworking to make a decision on who moves on to the next level. So it's great to see the submissions that we've seen and the success of the digital transformation projects, the award series, and of course the DX Leaders series as of today. So let's kick it off with a poll. As always, we are asking our audience to get a idea on where do we stand. So who's actually playing the real catch up here in fintech and the digital transformation? Is it the fintechs or is it the large banks? So who's playing the real catch up here? Andreas, what's your take? Is it too obvious or not?
Well, I think it's a bit of both because they all need each other. So, but there is no kind of third option. So, you know, I'm just going to take one.
Okay, and just a reminder for everybody, we have the Q&A section open here for your questions. So please use the Q&A and not the chat function to place your audience questions. And as always, we have reserved 15 to 20 minutes to really focus on what you want to know. Please post your questions or upvote those of others that you believe should be asked before we run out of time. Normally the questions come in late and then we are unfortunately not always able to address them all. So let's close the poll and have a look at the result. Where do we stand? What does the audience think? Large banks have to do the catch-up. I think that would have been my bet as well. But some even say it's the fintechs actually. And that's the interesting part about fintechs, right? Is it a business model change or is it a specialized, better approach to a very niche solution? So let me introduce the guests and then Andreas will kick it off with the first questions. Thank you everybody for tuning in. You could have been anywhere else, but you chose to join us today. Thank you very much. Clarissa, if we could switch off the PowerPoint, then we can see our fantastic guests while I introduce them. Thank you very much. So we have Karsten Kemna. He's the Managing Director of CREALOGIX Asia Pacific. Welcome, Karsten. How are you doing today?
Good. How are you? Thanks for having me. Very happy to be here.
Then we have Terence Seow. He's the Managing Director of the Bank of Singapore. Hi.
Hi,
Terence.
can you hear me? Can you see me?
We can hear you, but I'm not sure we are seeing what we're supposed to see. But
able to get my video on place, yeah. Sorry about that, but hello everyone. Nice to be here. Thank you for inviting me. I'll try to get it organized.
And we have Yves Roesti here as the Managing Partner, Synpulse Management Consulting. Yves, how are you doing today? All good?
Wonderful. Thanks a lot for having me in this round. I'm very excited to be here.
And last but not least, the CEO Asia and EMEA of NCA, Dr. Tom Ludescher. Tom, what's your take on the result? Would you also have tipped on the banks or the fintechs?
Yes, I was one among the ones opting for the banks because, of course, banks have the access to all the clients, and that's where you have to start. Thanks for having me here.
Thank you. Over to you, Andreas.
Well, okay, so let's get this started. So, you know, we actually didn't want to talk about COVID since we have now a vaccine upcoming, but obviously COVID is still a topic, right? And I think also a topic in the wealth management space. So I think I want to just kick this off by maybe asking Tom, you know, based on what we have been discussing previously, you know, what will be the real winners be if you look at COVID and the transformation that has taken place? I mean, what do you see? Who is going to come out as the real winner out of this battle of digital revolution, and why?
Yes, I mean, first of all, I would say COVID is a human drama for everyone involved, and that's why I have a bit difficulties in calling these winners. So everyone getting out of this stronger, but I think it's a very good roadmap for everyone to have learnings to see how are digital-led companies doing in these times and what can you learn from it. And some of you may have seen a report that Google and Temasek released earlier this week. That's the economy Southeast Asia 2020 report. They do that every year and they measure how many e-commerce customers do you have in Southeast Asia. The report for this year was really dramatic because it was 40 million people more in Southeast Asia starting with e-commerce as customers. And that's actually the biggest jump ever since they started measuring. Normally it's around 10 million more a year. And so you see this effect that COVID had on e-customers. And the interesting part is always, well, will they stay? So once we are back to normal, hopefully soon, will they stay on digital channels or will they go back? And 9 out of 10 of the customers asked by Google and Temasek in their report basically say, well, actually, that's pretty good. We will stay on digital channels and we will move forward. And this is probably for everyone here really a wake-up call that digital channels will be the more normal. And it's more about adding traditional channels to digital channels than the other way around. And when you see today, what can you already buy or service on digital channels, then you see it's mostly simplistic products because that's where banks, insurers, everyone started to basically digitize products is on the simple side. The simple products tend to have smaller margins. And so the big challenge will now be going forward, how can you bring the big products, the complex products with higher margin, how can you digitize those? And most importantly, you will have to realize that some complex products cannot really sold all automated through a digital channel. So there will need to be some sort of human interaction, can be a call center, can be a branch, can be a video conference. And the real winners, so to speak, of managing the digital channel model are actually the ones that can combine an omni-channel experience, the user journey, and make sure you have a high conversion ratio.
Okay. Well, thank you very much. So we are already in the middle of the topic. So you were mentioning, the complex products, obviously, that are much more difficult to digitalize than, let's say, just the digital payment of a retail customer, right? So, and if I now move over to Yves, building on that question, what is the behavior change that you see with the big banks that are actually driving all these big, chunky, complex products to digitalize? I mean, how would you see the behavioral changes with these banks?
Thanks, Andreas. First of all, we see about two things unfolding. First of all, the trading volumes were up during that phase. So actually trading commissions rose during that time. So that helped the banks generally, right? At the same time, also the travel budgets got freed up. So that basically helped the bottom line of those institutions. The second thing we see is that, of course, not surprisingly, the digital budgets get prioritized. Initially, everybody was shell-shocked and had to get their logistics right, but then the budgets are now flowing. We're talking about traditional institutions. So go-to-market with new features still takes anywhere from 6 to 18 months, right? Which is rather slow, and we probably come to the neobanks agility a little later. I think that when it comes to the daily business, of a wealth manager or a private bank, where you have mandate-based engagements, so discretionary portfolios, obviously they run, right? The advisory side is the daily client engagement. So their banks are investing into things like e-signatures to make sure that the signing of the term sheets can be done easily, and also that the engagement channels, for example, that third-party messengers could be used, so the clients can be engaged in a better way. What I'm worried about, and maybe that's also then where I would like to hear from Terence, how do you acquire new customers, new high net worth individuals out of such a situation where you cannot engage? I mean, personally speaking, I'm also in this client interface. It's actually okay to continue with existing customers. They know you, right? Cross-functionally.
Yes.
But to get to new clients and to build that bridge over, let's say, this a studio setting on a almost like a YouTube-based studio, that's very hard to achieve. So I think that's where the challenge is.
Yes, you're absolutely right. At Bank of Singapore, we face the same challenge too. And that is for existing clients, they are still very happy to adopt the new technology to engage because they've already met up many times on a face-to-face basis. There's enough of intimacy and rapport there. But for new so-called prospects and clients, many of them are like saying, let's wait and see. When the COVID situation resolves itself, we'll meet up and then we talk. So the kind of onboarding process becomes a little bit longer for new prospects. But the good news is that I think that increasingly, we've seen clients adopting technology as a form of communications, and they are getting more comfortable doing portfolio reviews, like you said, having a virtual certification of document, certification of so-called face-to-face meetings, replacement, and that basically clients are getting understanding that this is the new normal, and that even portfolio reviews and even going through what I call risk disclosures and portfolio reviews on a periodic basis, this will be the new standard and benchmark. So I think that the good news for all of us is that I think that the situation is improving. I think the gestation period that I mentioned earlier on is going to get shorter. And I think that at Bank of Singapore, we have been getting success, especially in the last few months. The initial months, many clients are very tentative. Many prospects are very tentative. So taking baby steps towards this new normal. But I think that now they've come to realize that, well, this is where we are, and going forward, it wouldn't change very much, even when the economy opens up.
Terence, a follow-up question before I move over to Karsten. You're one of the fast-growing private banks in Asia.
Yes.
Talked about the client side, but what about the internal side, right? So how do you make sure that digital adoption is not just driven by the market, but also that your own staff are accelerating and embracing and encouraging digital transformation?
Yeah, I think the good news is that at Bank of Singapore, even pre-COVID, we have already been spending millions of dollars upgrading our systems and getting our people to be into the new normal. So when actually COVID came about, what we have planned for the next 5 years is being crashed and being fast-tracked into the last 6-9 months. And thankfully, a lot of our staff actually have stepped up. And in fact, when we cut over from pre-COVID to post-COVID and into the COVID period now, people are working from home, people are working out of office, 50-50 based on the MES regulation and the regulatory framework. Many of the tasks and the processes have been moving very nicely. And in fact, the good news also for Bank of Singapore is that our results are excellent. Our revenue per month is almost year-on-year similar to 2019. And we have a huge reduction in costs that we spend on travel, accommodation, entertainment, and seminars. So we are looking forward to a very good closing end December 2020. So to your question, I think that the good news is that we have already prepared, and right now fast track, and we are now in a good space. People in the bank are very comfortable using the Citrix, using the Avaya, using the Teams, using the Skype, using the Zoom, whatever tools is necessary to kind of gel our relationship with our client and to make sure that our clients are comfortable and satisfied.
Okay.
And Lars, I guess this is where I would also agree very much on. It is not the people only; it's also how you empower the people. Yeah, the kind of tools you provide to them. How much is there still processes where you need to have physical signatures on a 10-piece document, or whether everything can be done on a tablet, and therefore everything can be digitalized. Also with the regulatory side.
Yeah. To add to that, whatever we can digitalize, we digitalize, including e-signatures, including going paperless. So right now, at this current stage that I'm speaking to in November 2020, we're at 90% paperless adoption. And we're going ESG, and we're actually looking towards all that directions to make sure that we're doing good for the world, climate change, carbon-free, and at the same time moving towards the digital journey, having our processes to be automated, and to make sure that, even on a secured communication basis, we already have our portal in place so our clients actually communicate to us and give us remittance instructions without signing through the secure communications so that they can actually enter confidential information on a one-to-one basis between Bank of Singapore and themselves.
Okay. Thanks, Terence. So Karsten, a little bit follow up, right? So we looked at general, we saw a very happy bank manager there. Revenue the same, costs down. I would be happy as well. Karsten, from a digital transformation priorities point of view, right? What kind of priorities do you see, especially in the wealth management community? What are the burning topics and how do banks really address that?
Well, I would say it's all about the customer approach and the customer journeys. Yeah, and that goes hand in hand also with the role of the relationship managers and how they interact with their clients. Yeah, and what maybe in the past used to be a monthly face-to-face coffee meeting, now you have to have a different level of engagements, transactional but also informational. Yeah, and that means the whole idea of mobile first and what you can do on the mobile is becoming more and more important. How can you do an end-to-end transaction, including a prior chat discussion on a digital tool instead of having to do it as a mix or a hybrid? So all of this is coming to the forefront. I think another one we really see a lot of activity on is the whole onboarding piece and how you are able to get new customer on board without having to have all the, let's say, physical checks that used to be in the past, like you have to bring your passport into the branch or you have to have a physical signature 2 times on a document, things like that. So this whole KYC and being able to do the end-to-end onboarding is as important as the conversations afterwards.
Okay. Yves, for you for one question. I know Andreas is already itching with the next one.
No, you go ahead.
So technology is normally providing solutions and opportunities, right? But it's always about what's the real impact. So from your point of view, with all those technologies, capabilities, resources available, some we were forced to use because of the pandemic, others are at our disposal anyway. But what do you think will create the biggest impact on the success on wealth management firms? You know, we can use tools for the sake of tools, but where do we really see the punch? And more happy MDs.
So where does the music play, right?
Yeah.
Well, I think on the private banking side, the business model are traditional, right? The face-to-face is still there, even the video nowadays, and that will probably stay because also it's highly tailored, right, and bespoke. Where the music really plays is the second camp, where I would call it the local banks that are trying to harness what they call the democratization of wealth, right? They have understood that the emerging affluent have certain needs and they're currently underserved, right? And they're trying to harness those people, those clients. So they're not jumping off into, let's say, a lower end private banking offering. Ideally, of course, they have also their own private banking arm that eventually will be handed off. But I see strong investments over the last 3 years with our at least 2 of the 3 local full banks. We all know that DBS has started their Digi portfolio, I think it's called, and OCBC started their Robo Invest. And so they're trying to really create that sort of the wealth management experience, and they're improving this on an ongoing basis. So bringing sort of the Grab and Uber experience to wealth management. Another camp that I would like to highlight here that we are observing at the moment in the market is asset managers that want to go more directly to clients, so to develop a direct to customer offering, because they obviously have the product knowledge, arguably, and connected to them also the insurance companies, and that's a really interesting one as well, because insurance companies, they have huge distribution capabilities, and while you know, when you take bank assurance as the opposite, where the bank becomes the distribution channel to the insurance, now I see strategies of local insurance players actually venturing into wealth. Yeah, And with the fact of having banking as a utility with open banking with APIs, we can actually connect to let's say CASA accounts as an insurance player, right? And we can start this distribution of actually banking products. And that's, in my personal view, a very interesting development that we shall see some music there as well.
So that's a very interesting topic, because if you have been talking about the blurring of the lines of the traditional boundaries basically between banking, insurance, bank assurance, then also the new players that are coming in. So the boundaries are blurring, right? And so we have an expert here on this panel on bank assurance. So I want to ask Tom, these trends that we have been talking about in digital banking, how are they going to impact the bank assurance model, and what is really critical in bank assurance in the future? What are some key trends there?
Yes. So bank assurance, most of you with a Swiss link would remember back 20 years ago, you had Winterthur Insurance, Credit Suisse, big debate. Should a bank buy an insurer? Then a few more insurers got bought either by banks or the other way around. Banks bought insurers. And it was always a little bit lukewarm, and people started challenging the model. Is this really the way to go? And the question is, what went wrong at that time? And when you see historically, bank assurance was always a good channel for distributing insurance products, because the bank has simply more client interaction during a year compared with an insurer. Because as an insurer, you generally work with annual contracts. So you basically approach, you quote, bind, and then you renew a year later. And you really need to find the reason to talk to your customer in between and create the relationship. This has always been difficult, because when the insurance agent called you up, then usually people were a little bit like, oh, he wants to sell me something again. Today, this really changed, and this changed particularly from the banking side, because the banks, they started selling insurance products that were linked to banking services. So like you get a car loan, you get a mortgage, then you need credit protection. You also need some car insurance. You need some home and content insurance for the home that you bought. So this is basically the way how it was easy in the past, just to add on one product more and without having to explain too much. The banks have, however, started now, and particularly some of the local players that also Yves mentioned, they started to really collect data, because they have from payments, from browsing history, from many, many other data sets. They can basically pull some data. And if you pull that data and you let your advanced analytics, your machine learning, and whatever else you have in your tech stack, you let that run across that data, you can come up with some very nice digital leads. And these digital leads are, on the one hand, of course, for banking services, but also for insurance services. And for the insurance services, this opens up basically to sell services and products that are not directly linked with the banking product, but you, because you're closer to the customer, have spotted that he's now in the right moment, and so you have to approach him at the right moment with the right product, and then still convince him to bring him over the line to buy that product, and you can earn your commission. That's what we see these days going on very strongly. And probably one big trend that we see in retail and also in private banking is the personalization of the offering. In the past, you just got your plain vanilla type of product done. So the banks have really invested heavily to come up with a more personalized offering. And when you do that for the banking product, of course, for the insurance, that needs to follow as well. So this is about highly modular products, where you have, it's a bit like a Lego system. You can basically combine policies according to a specific need of someone. This is a technology-driven model, because you need to have the mixer, so to speak, that you give into the hands of either the digital channel or the hybrid human channel selling that product to make something useful out of it and demonstrate value to the customer. Because today, a customer is not prepared anymore to pay you a big commission for selling a standard product. These times are over. So today, the person giving you an advice, and it can be a person, it can be a robo-advisor, it can be any other sort of advisory tool, needs to justify the value that is added by taking the role of advising the customer. And if you manage to do that, there will always be a nice extra margin, because you can come up with a product that really is relevant for a client and that adds on to to a good product offering. And for this, it's technology driven and it's open API driven, what Yves also mentioned. So for me, this is the way to go for bank assurance 2.0. You need to be highly modular and you need to be very easy to integrate.
Yeah.
Which has to do also with the overall wealth management proposition that banks will have in the future. In the past, maybe they have been focusing on investments only, but we're talking about retirement planning, we talk about insurance, we talk about other advisory services, even philanthropy kind of stuff that is now, let's say, if you're with your bank lifelong, you want to have these discussions also.
Yeah, yeah. So I think, Karsten, you're touching on an important point, right? And what Tom was also saying is one of the key trends is actually this collaboration and this collaborative ecosystem that we need to, and that the banks need to start to live in, right? And obviously third-party providers are important in that ecosystem. So what do you see the role of the third-party provider, and how can you really make a difference, and what are the opportunities there?
Well, I guess the key question that the banks are asking themselves is always buy versus build versus cooperate, and probably there is no black and white or no right or wrong. So I think players like us here on the panel have distinct value propositions, and those need to be presented properly. At the same time, the bank has to also understand opportunity costs versus what they have to invest in somebody as a third party. So I guess I mean, without getting into details, I guess it will always be a question, and even more in the future for banks, and especially how we call this. Some of the banks actually call themselves tech fins. They have huge IT systems, yeah, and huge IT people. I think something like 20, 30,000 people. So how do you feed them? What do you give them? And why do you find then a good reason to use a third party for something specific?
Yeah, and obviously you're always competing then with the internal IT department. They have to justify their budget. And
correct. With the build side.
Yeah.
Yes.
Sure.
I want to ask Terence a question. Terence, are you there?
Yes, I'm here. Yeah, can you see me? Yeah.
Yes, you're back. Good. Let's talk a little bit about revenue streams. Where do you see that your business model might actually change? Where does the next revenue stream come from? How much do you think your bank and model has to change? Are there, because of technology enabling it, untapped opportunities? And last but not least, so new revenue, untapped opportunities. Are you scared of the new kind of digital banks, or for your segment that's not really that relevant?
I think that we are actually adopting a digital journey, and we already have platform that we are already doing at the moment, which we see that we'll be able to serve our clients very well, to be able to get them to be digitally onboarding, and at the same time be able to do portfolio reviews and be able to give them secure communications to be able to interact on an intimate basis with the RMs and the so-called supporting staff. So I think that on that part, I do not see that as a challenge. In fact, I see that with digitalization, the bankers and the support front office staff will be able to be more efficient and more productive. So for existing clients, we will extract more time, it will engage them more productively, and will generate revenue. And for the new client, they'll have more time to be able to hunt and to harvest them. So I see this digitalization journey as something as a major positive. And I see that right now, what we are actually doing at Bank of Singapore is to try to get our bankers to be actually aiming for higher revenue per head count, aiming for higher AUM per head count, so that we should be able to be more productive using the tools that are available to us. At the same time, we also see that with this situation happening at the moment, clients are also doing more business, especially in a very vibrant market that we are seeing at the moment with lots of liquidity. And now that the US elections is over, especially so. So the next catalyst we are seeing the stimulus package, plus the fact that the vaccine situation seems to be improving. And I think that the vaccine availability will soon be at our doorstep soon.
So, okay.
Can I just ask a follow-up question here to Terence? Sorry, because it's one important thing. So if you look at razor, right? They want to create this first global bank for millennials, right? How do you,
Yes.
from a life cycle perspective, that actually these customers are gonna move over to you at some stage when their wealth is big enough, you know, and that you can actually
Yes.
them and
Yes.
offer that makes sense.
Yes.
And you're not too late when you try to catch them when they're 30 or 35.
Yes, absolutely, absolutely. That's the reason why I find that it's so important for us to have the online offering and do it very well there, because for the mass market, for the affluent, basically that is the best way to connect with them. Many of them at the moment are already using interactive brokers like Bank, eToro, and IG markets, and I think that many of them are already very comfortable using that, and it's user friendly, it's efficient, and it's cost effective. I think that is a place whereby that is the bulk of where digitalization should be aiming at least for the time being. Because for ultra high net worth clients and family offices, they still like the intimacy of a one-to-one chat. They don't mind paying a little bit of a higher cost, but I like to see us having that intimacy, speaking over coffee, and having long-term solutions like trust, insurance, 13X, 13R, a VCC that is happening in Singapore. And basically, we are doing family offices for them. We are doing immigration kind of ideas all wrapped together as one total solution for the family on a hybrid basis with their corporates, on a hybrid basis on their global wealth and properties as well, including those in Singapore, in UK, and other parts of the world. I think on that end, if we look at Ant Financial, the one that was recently canned by the Chinese authorities on Jack Ma, I think they have the perfect model at the moment. They have a hybrid on their platform. We're doing banking, asset management, insurance, peer-to-peer lending, all in one. Of course, they got canned because there's too much of leverage in the system. There's not enough of oversight, and there's not enough of regulation. And I think that's where the Chinese authorities get a little bit worried. But let's say on this part of the discussion that we're having right now, I find that they have a very complete platform. That platform is ahead of the US. That platform is ahead of many of the players in Europe as well. I think that that's where we aspire to be, having a strong platform to engage clients of different segmentation. And of course, on our private banking side, we are the top end. And basically, we have clients that are 70 years old, 80 years old. They are probably more happier to be having the intimacy over a yacht and over a dinner rather than to be going on a username and password kind of engagement. But then again, we are planning for the second gen business as well, as we see that intergenerational wealth is going to be passed over the next 5 to 10 years in Asia, especially so. So we're also preparing to make sure that we do not lose out on the second gen engagement, and also their ESG initiative and their interest groups here.
Maybe over to Yves, right? So Terence basically shared his roadmap, and it's all kind of very gloomy, less doomy about how you grow your existing base and ideally new. But Yves, from your point of view, how do you see that digital banks can actually challenge even the top segment of banking? Because everybody wants that part of that rice bowl, right?
Yeah, absolutely. I think they're not at the moment very clear. It's in its very nascent stage. They're just coming up, right? We have 8 licenses in Hong Kong. We have now 5 in Singapore. And typically they're sometimes a bit of an e-wallet plus offering. And I think what many people do not understand, it's intriguing, right? If you look at a challenger bank, okay, mobile app you don't need branches, in a highly agile organization, and you can launch it. Of course, you need a bit of capital for the capital requirements. But what many people don't understand is if you take some of those more mature neobanks like Revolut, Monzo, or Starling, and this is public knowledge, you can look it up, the per customer value on an annual basis is roughly between 20 and 30 US dollars, right? The run rate to run a challenger bank is anywhere from 20 to 30 million US dollars. So what that means is you need to actually have north of 600,000 customers to break even, right? To put that in perspective, that's 10% of Singapore that you need to acquire on your platform. So it always, to the point of Terence, why is Ant so successful? I mean, they have an application that addresses multiple client needs, but they also scale like crazy, right, for the Chinese market. So it always has to be a scalability play. So Razor is always going to be regional, as well as all the other contenders for the license. And yeah, and we shall see. But I think it's a very steep business case with a lot of pitfalls along the way to actually get this out and become a real challenger to the incumbents.
Which for me also has to do if you focus on transactional business first and retail banking first, is very low profitability. So how do you upscale in the future also into the wealth management space?
Yeah, that's a very good point, Karsten. I mean, just to add on, of course, look at the revenue reports. 50% is currently card business of those neobanks. Of course, they have to find high margin business, right? And it's not going to be the net interest margin they get out of deposits and lending in the current low interest rate economy. So you have to potentially go into maybe wealth management, sort of affluent, democratization of wealth again. So this will be coming. So maybe we'll see another wave of offerings coming from that side.
Yeah. So maybe I have another question for Karsten, which is very linked to that discussion. Customer experience is obviously a key topic when it comes to building a customer loyalty, and that's independently whether you are a retail customer or a wealth manager or a wealth management customer. So how do you manage that experience, without disruption? And how can you as a third-party provider really make sure that you have this customer experience well implemented?
Well, I think the first one, maybe from own experience, and I will not name shame here any bank, but me being a person in Singapore for almost 15 years and having banked with the same bank for the same time, for the entire time, and wanting to found an own SME a couple of years ago with the same bank, and they want all the details about me one more time all over, even though all of this stuff is in their system, is for me a very bad customer experience. Yeah, and that's the one side. The other side is again, how do you find the right mix between or the hybrid between a personal and a digital approach? Referring to Terence also, the 70, 80-year-old will need something different than a 30, 40-year-old, both from a product, but also from a digitalization perspective.
Yeah.
So it's really personalized, but with the right attention on the digital side.
Yes, that's right.
Okay. Very good. So Lars, are we approaching the rapid fire?
Let's have a look at the rapid fire. So I'll throw a few questions at you, and it's a left, right, blue, green, yes, no, up, down kind of answer. Just quickly, that is the answer and why. So startups, from your perspective in the banking environment, buy and integrate or just partner? Terence.
Partner.
Partner. Yves.
Commodity buy, strategic client journey build.
Okay. Tom?
I mean, it really depends, because if you say buy, is it buy the company or buy the service?
Yeah. Obviously, typical consultant, right? It depends. Karsten?
Cooperate.
Cooperate. Okay, so that's partner. Next, digitalization requires technology more or customers more to succeed? Customers or technology? Karsten?
Customers.
Tom?
Customers.
Yves?
Be obsessed with the customer.
Terence, I guess it's the customer as well, right?
Yeah, that's right.
Always. Last but not least, digital transformation, more of a threat or more of an inspiration? Terence?
Inspiration.
Tom?
Big inspiration. The best is yet to come.
Whoa.
Yes.
Singapore school slogan. Okay, Karsten.
Inspiration and necessity.
Necessity. Yves?
I would say a huge opportunity for all of us.
Okay, good. Okay, then let's get over to the questions from the audience, and thanks for Terence too already answering some of them. Highly appreciated, because we always otherwise run out of time. So one question is, what would your business look like if you started it today, if you could have a total greenfield approach instead of heritage? Who want to take that one? Terence, so if you would have to build Bank of Singapore from scratch,
Yeah,
what would you do differently?
I would probably look at Ant Financial as inspiration. Aside from that, I will probably also take inspiration from a hybrid of interactive brokers plus current OCBC retail banking offering, plus kind of eToro offering to kind of democratize our investment process.
Okay, cool. Yves, when you see banks and you could start one from scratch, how would you do it differently?
Well, first and foremost, it's about leadership and culture, right? It's completely something new from the traditional institution, and it really starts from that. So you will have, you know, in the new jargon, you have product owners or the Spotify model. So actually what it means is that the firm itself owns the customer journey end to end, right? And the CEO is actually no longer a manager. He actually becomes the amalgamation of all product owners. So he's owning the overall client value proposition, as it should be.
Okay, thank you. Let's go to the next question in the interest of time. Tida Hausherr asks, how do you use new technologies like AI, machine learning to help you stay competitive in this challenging environment with the emergence of fintech? Karsten, I'm sure that's something you can answer in your sleep.
Well, I would answer it like this. I guess when you have this digital approach to your customer, it is much easier to utilize the data in a meaningful way. And what I'm trying to say is it is much easier now to prepare for a 1 hour Zoom meeting with a high net worth individual than last time. And it is much easier based on the data you have for this person to customize and personalize the messages and also offerings. So absolutely agree. This is a huge opportunity to really not only intensify the customer relationship with that particular client, but also to increase sales or to increase cross-selling.
Good.
All right, so we have one question also regarding bank insurance. So that's something for Tom. How is the distribution model going to change in the future, in the coming 5 years in bank assurance, and what are capabilities that you need to build up to do this?
Okay, that's an interesting one, because when you see historically, bank assurance has always been an exclusive relationship. So you have a bank partnering up for usually 10, 15, 20 years distribution agreements, and this is exclusivity. And exclusivity can be something good if it's exclusive, but it can also be something bad, because you may just have to sell something your clients don't like. And so what we clearly see going forward is that in many markets that don't have this legacy of these exclusive distribution relationships, that it's a marketplace model which is now coming into life. The marketplace model is then part of the bank's ecosystem. You have here already some very active players in Singapore that have started building up such an ecosystem with a marketplace approach. And there basically you need to sell the best product that offers the greatest value for your customers. And if you do that, you will always sell more. And even if you earn less on a commission basis, you don't care, because you add value to the customer. And for me, this is really the way forward, is that it's opening up, and basically banks, when they do their own ecosystem, it's the same like an e-commerce company. The weakest part of your offering is basically the worst product that you sell. So better make sure you sell a selection of products that are good for your customers, and that you have the offering that is better than anyone else's.
So then, Tom, looking at Singapore, just an example, is Singapore Life actually more of a bank and wealth manager or actually an insurance? I know which label it carries, but if I look at the products, how they're packaged, I'm not sure anymore.
You have to see the lines have always been blurred in savings, life insurance. When you have basically a unit-linked product, this has always been a risk part protecting you for risks to your life and to your health, and you have had a savings part and investment part. And that's also why today, when you want to decide now what is it, probably a little bit of both. And that's what Yves mentioned today in the discussion, that this is really something that we are seeing now, because you want to expand, you want to add more value to your customer, a broader range of products. And of course, when you offer the risk part, make sure you can also cover the savings and the investment part and the other way around.
Okay.
All right, we have one interesting question here. Anonymous attendee. So he's or she is asking about the mix between personal and digital challenges. So offline to online, or online to offline is a big trend. What is this hybrid client service model going to develop with the different touch points? And what is the role of data analytics in that whole game between online and offline?
That's how many questions in one?
That's, I think, four questions in one. So who wants to, so we're talking about offline, online, different touch points, and data analytics or machine learning AI. How is this supporting that interplay?
Maybe I can help here. So the multi-channel approach is nothing new, right? You can call by phone, you can go by your web banking, mobile banking, and meet them at the branch, right? The magic comes when you combine this in the so-called omni-channel experience. So that means you can start the process in one channel, flip the channel, and the next channel actually continues where you actually have left off, or at least there's a data point that when you, I'm sure you had this experience when you call your credit card, and then afterwards you call your banker, and the banker has no clue that you actually called the credit card of the same firm, right? So I think there's a lot of improvements that can be done in a very easy fashion, I would say, for a tool-based, and that's where the data models come in, and where such a seamless experience can be achieved.
So is it mostly kind of, you know, a kind of an issue about the system, the IT systems that are actually so much, you know, out of, out of kind of, how should I phrase it? You know, dispersed.
It's a silo experience, right? It's not just tool.
Yes.
It's not just a tool question, it's also an operating model question, right? That the organization also supports such a process. So it's process, organization, but also then eventually the tooling, right?
Yes.
Plus, I guess also a lot of legacy. So I mean, especially on the core banking side, you may have systems 20 years old, which obviously on the digital side will be totally outdated, but they still provide what they need to provide.
Okay.
Here we have one interesting question. It's a little bit of a stretch question. It's like more looking at expertise in the financial sector, right? We're seeing significant quantitative easing happening. For example, inflation in the US and the US dollar, geopolitical risk. How will this affect the macro level for the years 21, 22, 23 period? What should we expect on an economic level? And you know, we're all in finance, that expects wealth management. Very big question. Who's willing to, you know, take that one on? Terence, if somebody, your top customer asks you today, what's the glass bowl looking like for the next 2 years?
I think one thing that's very clear to us is that we are seeing massive liquidity that's being injected by the central banks in the trillions of dollars, right? I mean, this COVID environment, you know, it has almost become endemic. Almost every developed country, starting from the US to Europe to Bank of England to Japan, and all other countries are just adopting this same formula. make sure that we have enough of money into the coffers, have so-called stimulus packages and fiscal programs. And I think rightly so, because the rich and the poor divide has become so big to the point where politically it become untenable. It's become very hard for them to defend. And like in the US currently, they're looking forward to the next stimulus package. Although currently the Republicans and the Democrats cannot agree as yet, and also because Mr. Trump has not decided to accede to the defeat yet, and looks like he wants to stay on. So I think that currently there's a lot of people who have been on the sidelines. They've been looking to buy back and going back to the markets. I think the stock market still looks promising, but we need to be very selective. We need to be very close to the markets to know where the flows are, whether it's to momentum play, to value play, which are the teams, whether technology, whether banking, is it going to be travel and hospitality opening up, or the oil and gas? I think that the key to portfolio performance is being able to know the nuances and be able to follow the markets closely. And we are fortunate to be able to engage clients on a productive basis, whereby there's enough of trust and confidence for us to hold our clients' hands to be able to help them to achieve superior portfolio performance. Personally, for me, my biggest worry is the day when the US starts to play one card. One card that I think have huge implications for the world markets, and that is if they decided to hold China accountable for COVID and pass a bill to freeze their US treasuries and US dollars and or sanction them, then I think that there will be huge implications to the financial markets. Most people think that it's a black swan event. Most people do not think it will happen. But I think that under this new administration and going forward, I cannot discount the fact that it may happen. And that worries me. Yeah.
So there is one more question, and I think it's a very good wrap-up question, kind of to summarize what we have been discussing. So, we have been talking about digital wealth management. So if you could just a quick 2 arguments, what are key success factors going forward to win the race in this digital wealth management game? Just if we quickly do the round, we start maybe with Karsten. What are 2 success factors to make the race?
So again, we spoke about it earlier, customer first, customer journey and customer experience. And secondly, to be agile and flexible and have the right systems behind to be able to do so. And here we're talking about open banking, API environments, so more the technology side to support the customer journeys.
Okay, very good. Tom, any additions?
Yes, I would add here, or in line with Karsten, we need highly personalized services with modular products. On the one hand, that's system driven, and on the other hand, you really need this seamless omni-channel experience where you can, without any interruption, switch over from purely digital channels to hybrid channels and back. And that's again also a technical factor that is a success factor.
Okay, Yves, it becomes always harder. So anything?
No, yeah, I'm going to answer a bit more emotional. I think it was Peter Drucker who said, culture eats strategy for breakfast, right? And nothing goes over good leadership and a strong culture and being obsessed with the client, and only good can come.
Well, there are some other people that would then say software eats culture for breakfast. No, or
no.
What have you? That's a difference. So maybe Terence, just to wrap up, any additions, key success factors going forward?
Yes, very good points from our panelists. To add on, I think that digitalization is an enabler, but a key to success is our people. So internally, we need to continue to educate and to upgrade our people's skills to ensure that they continue to reinvent themselves, adapt to the new changes and environment. Externally, with our clients, we need to kind of manage them in a way whereby we kind of explain to them that we are going to the new normal, and using digital tools will be the way that we will engage you going forward. And through this journey, we hope they will get the highest service quality that can be delivered to them, and to achieve superior portfolio performance.
Okay, very good.
Excellent. So I think that wraps it up for today. We had some fantastic quotes, and I'm a little bit struggling, but I think I'm still going for my muesli for breakfast when I don't have time. So thank you very much, Tom, Yves, Karsten, and Terence, and of course, Andreas, as always. That was episode 10 of DX Leaders with some fantastic quotes we just heard. We heard like the magic comes when you combine the omni-channel experience. Yves said that. Or Tom said the weakest part of your offering is the worst product you can sell. I like that anecdote. We heard just Terence glass bowl look. There's massive liquidity going injected into the market, so we see what's happening there. And some of the things that Karsten shared was, it's the third-party providers you want to partner with. Banks need to understand the opportunity cost versus someone who needs to invest in the third party, right? The discussion about build versus run, and how much do you still can justify your in-house IT department, because everybody want to keep their job at some point. So let's not forget about that. I think we've done all a fantastic job. So thank you very much, everybody. Thanks our fantastic attendees, the questions, and please everybody tune in also next week for DX Leaders episode number 11 on the 17th of November. That's already on Tuesday, where we're looking at sustainable innovation with IMD, FWD Insurance, and DB Schenker. And then Andreas and I will be back. Thank you, everybody, and have a fantastic Thursday, and a happy Diwali for those celebrating. Bye-bye.
Thank you very much, Lars and Andreas, and thank you to all my fellow panelists and to everyone. Thank you. Thank you very much.
Thank you to this team.
Stay in touch. Yes, stay in touch. All the best. Bye-bye.
Bye.
Bye.